China's economy is imploding. The once mighty GDP took an unexpected hit, and if that wasn't alarming enough, the year-on-year inflation rate has crashed to an astonishing 0%. Recent economic data raises doubt and challenges China's narrative of a remarkable post-pandemic recovery. The world's second-largest economy only grew by 6.3% in the last quarter compared to the expected 7.3%. And what if I told you that the CCP has fooled everyone for over a decade? Their biggest achievement isn't their miraculous growth, but rather having everyone believe they have had it.
High-performing growth in China is coming to an end.
Before jumping on, a quick reminder to like the video, because Xi Jinping doesn't want you to see this video. Undoubtedly, China's GDP has grown tremendously in the last decade. However, an important question arises: who is responsible for counting this GDP? For example, in the USA, the Bureau of Economic Analysis, BEA, is an independent agency that calculates and shares economic data, including GDP numbers, so politicians can't influence the calculations or manipulate the numbers. But in China, things are different. The calculation and reporting of GDP figures are carried out by local governments and overseen by the Chinese Communist Party, CCP. The problem is that there's no independent agency to check if the numbers are accurate. You might already know this, but let me simplify it. GDP is a sum of consumption, government spending, investments, and net exports. When politicians allocate money for projects like building a highway or bridge, it contributes to the GDP. You see, politicians love to talk about their GDP numbers because it can boost their image. In the USA, the BEA cannot directly influence the GDP through policies, which ensures a checks and balances system. On the other hand, in China, local officials are under pressure to meet the GDP targets set by the CCP. Their careers and promotions depend on it, so they might do whatever it takes to show impressive GDP growth, even using sneaky tactics. Two curious things are happening in China to boost GDP numbers: excessive government spending and deceptive reporting. In China, local officials can influence GDP by spending heavily on projects. They borrow significant amounts of money to fund these projects, which boost GDP numbers. But this can lead to a lot of debt for the country. Additionally, some officials lie about the growth numbers they report to Beijing. Thus, China's debt is growing exponentially. Moreover, there is a valid concern that the reported GDP figures might not accurately reflect the true economic size of the country. If this is the case, it could lead to an alarmingly high debt-to-GDP ratio. This raises concerns about a potential debt crisis in the future. According to rough calculations made by Professor Louis Martinez, China's GDP is 60% smaller than what they publicly claim. It's impossible to get real data because of the way the CCP operates. That means their debt is way higher than anyone ever realized. This story dates back to 2008. China was a poor country, but it rapidly transformed into the world's second-largest economy, becoming the factory of the world. Foreign direct investment rose from $0 to $110 billion between 1970 and 2008, and an astonishing 800 million people were lifted out of poverty. However, in 2008, a major crisis hit the global economy.
It was a tumultuous year for the economy. The housing market collapse created one financial crisis after another, and it often seemed as if the news could only get worse.
And China's growth was also affected. Why? Because China was the world's factory, producing everything from toys to t-shirts. The company that relied on this factory encountered a cash crunch and a drastic drop in demand, leaving them with little to manufacture. So if you were a t-shirt company with piles of unsold stock, hesitated to ask their Chinese vendor for more t-shirts, the consequence: foreign direct investment in China began to slow down, and during the 2008 event, it went from a remarkable growth of +29 to a surprising decline of -13.2% in 2009. To counter this, the Chinese government adopted a strategy to artificially boost its economy. They invested a whopping $586 billion and encouraged banks to lend to businesses and state-owned companies. But this led to several problems. The local governments faced target deficit problems since they couldn't borrow beyond certain limits. Additionally, banks were constrained by regulations, resulting in the rise of risky shadow banking, an unregulated financial system. China's shadow banking sector rapidly grew, becoming worth trillions of dollars. In 2016, the Chinese government decided to deleverage the economy to address the mounting risks.
President Xi's made it quite clear that he's worried about the leverage in the system and that he wants to deleverage the economy.
So they imposed strict lending restrictions on banks and non-bank financial institutions. However, this caused a real estate crisis, with builders unable to complete projects, leading to defaults by homebuyers and a slowdown in housing sales.
The crisis within China's property sector is getting worse. If this sector collapses, it could take the entire Chinese economy.
This real estate crisis, along with the banking restrictions, caused a ripple effect on the Chinese economy, resulting in an economic slowdown. And if your country is heavily indebted to China or closely linked to its economy, you might experience the impact of these issues too. Exports to China may decrease, and foreign investors might seek alternatives. A geopolitical analyst claims that China has only 10 years left before it collapses.
We find out recently that the Chinese have jumped the ship, and this is their last decade.
Until now, you might think that China has a strong, massive population, but analysts say it is far from the truth because China has also lied about its population.
I don't know that they've lied about their population statistics, and they overcounted their population by over 100 million people, all of whom would have been born since the one-child policy was adopted.
China's famous one-child policy, which lasted for decades, caused fewer and fewer babies to be born. As a result, China now has the largest population of elderly people in the world, which spells trouble for their economy. The challenge lies in having more retirees to support than young workers to keep the country thriving. But wait, there's more. In this nation, there is a cultural preference for boys, leaving fewer potential mothers to shape the future. Despite being a massive nation, can the Chinese youth save them? Well, that's a whole other dilemma. Their education system might not be helping either. The way education works in China is a bit old-fashioned, which focuses on memorization instead of critical thinking. Their conservative culture values conformity, discouraging too many questions. It's not the best mindset for nurturing future geniuses and progress. Recent events have shown a shift in attitude among the Chinese youth. Protests have erupted in major cities, with brave young individuals finally speaking out against their strict government. It seems they are tired of how their country has been governed for so long. China's youth unemployment rate has also increased. The rate among 16 to 24-year-olds rose from 18% to 20%, which is double that of the UK, triple that of the US, and quadruple that of Germany. This is a concerning issue for China, as it creates tensions among the young population and challenges the implicit agreement between the CCP and the people regarding economic opportunities. The government has initiated measures to combat this problem, such as subsidies for firms hiring younger workers and encouraging graduates to consider blue-collar jobs. However, with more graduates in the pipeline and potential challenges in the export-driven economy, bringing down youth unemployment might prove to be a tough task for Xi Jinping and the CCP. But the major problem for China is Xi Jinping himself. He's surrounded himself with people who will only tell him what he wants to hear. This creates a growth wars situation, where opposition and important discussions are silenced, preventing China's policies from improving. With Xi Jinping holding so much power, there's no room for challenges, and even China's billionaires can disappear in a snap. It's hard to imagine this place as a safe space for growth and progress. This struggle extends beyond China's borders too. Take for instance their grand strategy called One Belt, One Road. It appears to be turning unprofitable, with numerous infrastructure projects globally because the return on investment isn't looking so good. But wait, there's more. China's dreams of military dominance and technological supremacy are slipping away. Other countries are now taking over their role as the hub for cheap and efficient factory work. What do you think? How long can China mask its downfall from the world? It's like a ticking time bomb of debt over there, but still they can't seem to stop exaggerating their GDP figures. Only time will tell what will really happen.